Hello, everyone, and welcome to this Credo panel, Embracing Regulation, how the UK and US are warming up to crypto. So as two of the largest financial centers in the world, the UK and US have a key role to play in shaping the regulation of Web3. In 2022, both countries have made significant strides towards embracing crypto assets with more clarity over their approach to the market and moves to implement a definitive framework for the industry. But how will their decisions impact the rest of the crypto industry? And will new legislation in these key markets mark a turning point in acceptance and adoption for institutions and others? My name is Matt Neal. I'm part of the Credo media team, and I'll be moderating today's discussion. So without further ado, let's meet today's panelists. Firstly, we have Katie Fry-Paul. So Katie is an associate in the Financial Services Regulatory Group at law firm Taylor Wessing UK and a member of the firm's Blockchain and Crypto Assets Working Group. She advises both fintechs and traditional financial services firms on a broad range of EU and domestic financial services regulations. She has particular experience in advising clients on the financial services regulatory issues which arise when dealing with crypto assets and how best to handle potential challenges from the regulator. Next, we have Ari Redbord. So Ari is the head of legal and government affairs at blockchain intelligence company TRM Labs. Prior to joining TRM, Ari was a senior advisor to the Deputy Secretary and the Undersecretary for Terrorism and Financial Intelligence at the United States Treasury. In that position, he worked with teams from the Office of Foreign Assets Control, the Financial Crimes Enforcement Network, and other Treasury components to use sanctions and other regulatory tools to effectively safeguard the financial system. And lastly, we have Ben Whitby, VP Strategic Partnerships and Regulatory Affairs at Credo. Prior to Credo, Ben worked with a number of traditional financial services firms on blockchain technology and regulatory issues, and he built the world's first interest rate swap trading platform back in 2001. He's also led regulatory teams at Accenture and PwC before spending 8 years with HSBC as regulatory conduct and financial crime specialist, a role that involved writing the bank's first policy on Bitcoin in 2013. So welcome, everybody. Thank you for joining us today. I wanted to kick off with something that's really dominated the crypto discussion over the past few weeks of all the issues with Terra's UST, and that is stablecoins, which is the hot topic of the day. All the issues with Terra have prompted sort of renewed discussion around the direction of crypto regulation in general, but specifically on stablecoins. We've had calls from people such as Janet Yellen. We've had the G7 leaders calling for more specific regulation of the sector. And Ari, I wanted to come to you first and say, with all these developments, can we expect US stablecoin regulation in 2022? And what's that going to look like if it does come through?
Yeah, no, it's a great question. And first and foremost, thank you so much for having me. I'm excited to be on this panel, and particularly with this group. Look, the conversations about stablecoins amongst regulators has been going on for some time. I think potentially what we saw over the last few weeks will accelerate those conversations. But you can really kind of trace this back to when Libra launched several years ago, sort of Facebook's sort of now defunct stablecoin project, which was tied to a basket of global currencies and really supported and by some of the world's largest and leading companies. And when I think regulators globally saw that there is a cryptocurrency project that has the reach of Facebook users, hundreds of billions of users potentially, it really caused global regulators to kind of take a look at this space and the issue. In fact, FINMA in Switzerland was the first regulator to actually talk about stablecoins at all, and it was in direct response to a licensing request from Libra. And then we've really sort of seen things grow from there. We saw the President's Working Group in the United States, which is Treasury plus other financial regulators, write a white paper on stablecoins, talking about sort of calling for them, stablecoin issuers, to be regulated as banks. And then from there, we saw a series of actions by UK regulators financial regulators over the last, several months. So I think what happened here is potentially with Terra and UST is going to cause regulators globally to kind of continue that conversation. One thing I will say, and that is it's very hard to read the tea leaves of, the US Congress, which right now is sort of going into midterm elections and is very unlikely to do sort of some broad sweeping, legislation in this space. If they are going to touch anything today in the crypto space, I imagine it will be stable coins, because there is some guidance already from financial regulators on the topic, and potentially sort of like now an appetite for it, sort of given what happened in terms of consumer protection, investor protection. But I think that answer is sort of very much a we'll see. But this is definitely something that's been on the radar of regulators and lawmakers for a while, and we will eventually see them act.
So, Katie, just coming to you for the UK perspective. Obviously, in the UK recently, there's been a lot of moves towards clarifying the crypto regulatory stance. We've had stuff coming out from Chancellor Rishi Sunak and the Treasury. We've had a lot of stuff coming out from the FCA. And with these developments around Terra, does it change the stance or maybe the pace of development of what's going to happen in the UK?
Yeah, so I think in the case of the UK, it's going to change the pace, but potentially not the stance. So the stance of the UK has been, over the past few months, this has become really obvious. The stance is that where there is a risk of mass adoption and where there is a risk of consumer harm, that the UK will take action to regulate. So in the UK, we're expecting certain stablecoins, so stablecoins which are backed by fiat, either on a one-to-one basis or by a basket of fiat. So those types of stablecoins which are used for the purposes of payments are going to be brought within the UK's regulatory regime. The e-money and payment services regulations are going to be expanded to cover those types of coins. And that's really in line with the research and all of the papers that have been coming out, both within the UK, so the Financial Policy Committee, and also on a global basis, which is this concern that consumers will think that stable equals safe. And really they're two different things. And that's what we've seen over the past kind of week or so, where not all stable coins are created equal. And you need really a regulatory response, which takes on board those nuances and also considers how likely risks are likely to materialize and what the broader impact of those will be.
And Ben, coming to you, there's been a lot coming out from both the UK and the US, especially in the stablecoin issue, but more broadly with crypto regulation over the past few months. Do you see, well, specifically on the issue of stablecoins to start with, do you see those being similar approaches, or do you think there will be sort of individual approach from each country depending on the circumstances and the different attitudes of the regulators?
I think there'll be a harmonized approach. There's certainly conversations happening in the back channels for all of these kind of different products that are being proposed and being initiated. You have to, it's a very good call from Ari to kind of pick out the Libra position, because that really did put a lot of emphasis on getting this kind of resolved, because the risk of stablecoins, to move into a stable equals safe position is an easy one for the general public to kind of move into. And stablecoins are not safe, and they're not stable, and they're certainly not fiat. They do carry with them quite a lot of risk. So, I actually think it's an incredibly positive thing for the industry to have these assets that are going to be safe havens in the event that you want to kind of come and take a risk-off position for kind of crypto engagement, for initiating payments, and giving something that the accountants can look at and kind of understand without all the flexibilities and the fluctuations that exist in the token market, for sure. But there's another side to this, and that is that where are these stablecoins going to be issued? Are they going to be issued on private blockchains that are run by the banks, or are they going to be run by public blockchains? And if they're running on public blockchain infrastructure, then you're still going to need that native tokens underlying token in order to facilitate gas payments and other kind of engagements. So it's going to bring in a tremendous amount of fintech activity and EMI engagement across Europe, and neobanks across the States. into this tokenized world in a way that they can legitimately start to explore all of these different types of services. So yeah, I think stablecoins having a legitimate, transparent, safe framework and a structure that is as safe as fiat, even though it's probably an oxymoron given the last kind of 3 years of activity in the fiat space. Amazing for adoption in the crypto space. Absolutely amazing. So yeah, it gets double thumbs up from me.
Well, that's it. And the regulation coming has such a positive impact for actually creating a workable framework for crypto. Ari, how much do you think that actually the crypto industry itself is been very positive about regulation in general? Do you think it's going to be something that actually helps adoption and helps push crypto to the next level?
It's a great question. And I think we've seen sort of two parallel moves, which I think are positive things. And I think on the one hand, we've seen governments globally, and certainly here we're talking about the US and the UK, sort of, I think sort of change the language and the sort of positioning around how to regulate crypto thoughtfully. For example, in the US, you saw the executive order that talked about sort of, there were certainly risks. There are always going to be risks and challenges discussed in any regulatory framework, but it also led with the need for, US and democratic leadership in the world and the importance of that. And then literally, I want to say just a few weeks later, pretty much a group of UK financial regulators came out with very similar language. I mean, even celebrating it with minting an NFT this summer. So I think that we've seen regulators move. And then I think to your question, similarly, we've seen the crypto industry move from this whole idea of, hey, we're decentralized. That's the nature of what we do here, which means we shouldn't be regulated, to, what we need to really thrive and grow is we need clear regulatory frameworks. And I think Ben sort of got into this a little bit in his last answer, and that is, and they have to be global, at least in some respects. I'm not naive enough to think that, the regulators are all going to sit down and, come up with clear frameworks that, are cross-border and enforceable in some way. But I do believe that it's really important, particularly amongst sort of, what I think in the executive order in the U.S., the president calls sort of democratic principles. Nations that have those sort of democratic principles and want to bake that into sort of their regulatory frameworks, I think it's important that there's some coordination. And I think from Ben's answer, I certainly agree that I think that's the direction hopefully we're heading in, at least when it comes to sort of UK and the US.
And Katie, how important is it that the UK has made these significant steps forward in the last couple of months to actually have a clear framework for crypto? There's been a lot of negativity from the industry sometimes, given that London as such a fintech and financial hub seems like a natural home for crypto, but that hasn't really happened. And part of that is due to the regulatory environment. How positive do you think that is for the UK crypto industry and market moving forward as well? Now we have some more clarity and some more structure.
Yeah, I mean, I'm not sure I would describe it as negativity necessarily. I'd probably use the words people are skeptical about it. And I think that's because up till now, we've had quite a heavy-handed approach from the regulator, but that's only because I think that's the tool that the regulator has available to them to supervise in this space. So you have to give the regulator the tools that they need to properly supervise crypto activity. And I think the recent announcements from the UK government are really positive from that perspective, in that, it certainly seems like now there is a discussion about what those tools look like and how those tools will support industry and how industry can be actually involved in developing those tools. So, I mean, in the UK, as everywhere else, the way that I kind of think of the regulatory environment for crypto or for any financial service really is kind of a diagram of interlocking circles. It's a Venn diagram, and you have areas in that Venn diagram where there is no regulation, so there are gaps, and those gaps can cause harm either to individuals or to markets. And the process of designing effective regulation is a gap analysis of looking at those gaps, prioritizing them, and then kind of designing regulation which effectively takes care of them. And I think that works also on a cross-border basis. If you're looking at how regulation works and how these circles interlock on an international basis, it's all about gap analysis and then designing something to take care of those gaps. And I think recent efforts by the UK government and also kind of critically, I think, by the FCA to engage with industry about what that design looks like, that's the key here. It's not kind of to my mind, it's not the big announcement of we're going to mint an NFT or we're going to lead the world in crypto regulation. It's this, we're committing to speak with industry and to work with industry to design a regulatory system which works both ways.
And Ben, we've talked a lot about sort of global nature as well of crypto regulation and how, you know, when it's in one jurisdiction or another, by the nature of these firms, it's quite difficult to track. Do the moves by the US and UK maybe point the way towards new global regulatory standards for crypto, given the importance of these two jurisdictions and the regulators? Oh, I think you're on mute, Ben.
Yeah, sorry. I hope
whatever you were just saying was brilliant, right?
It was a kind
Yeah.
of mindful kind of nugget of information. I mean, there's a lot of, I listen to a lot of kind of weird and wonderful podcasts, and, you know, with people from like Peter Diamandis and guys from A16Z and, you know, all the crypto kind of podcasts. And one thing that is really apparent is that we are going through a fundamental change in human nature and society today, right now, here. It's happening, right? The cusp of crypto is just really the first kind of wave of realization before we get the whole kind of globalized position much more understood in terms of what that actually means for the world. And I think that, you know, we're in the kind of the early 2000s and the late 90s, we were going through a position where globalization meant outsourcing manufacturing to far-flung regions or outsourcing call centers to various different things. We've got a tsunami of different technology that is coming through. Crypto is the first kind of position with regards to kind of democratizing payments globally. We've also got AI that's going to kind of sweep through the white collar job market and give organizations superpowers. So you'll be able to operate a 50-man team, 50-person team, I should say, with the same kind of depth and skills and talent as a 3,000-person team, which is going to be incredibly positive. And manufacturing is going to move as well. So we're going to have manufacturing coming back into the US and back into the UK, but the factories that are producing all of these things, they're going to be manned by robots rather than people. So, you know, you combine that with the fact that everything is digitizing and we're conducting more and more activity online in virtual worlds with virtual reality and augmented reality. And you think, how is that not a position where cryptographic tokenized assets that can be deemed digitally scarce in the world play an increasingly more important role in society going forwards? And the answer is, it's absolutely fundamental that we sort this and solve this, because that's the way that we're going to build growth in the next wave of humans kind of society and evolution. I always kind of get pulled back to an article that Sebastian Thrun wrote back in probably 2012, 2013, when he set up Udacity. And that is the Stanford AI program that he launched and ran and released to the world as a free course. The top level Stanford graduate came about, and I'll make the numbers up because I always get the numbers wrong, but around 250. I think it was actually a bit lower than that in terms of the actual position. And that means that there are 250 people in the world that were better than the best Stanford student. Now, how wild is that? And the fact that now that we can form cryptographic entities in DAOs and pay these people this talent with cryptographic kind of tokens in a way that they can manage and operate in the world means that as an organization, you can start to think about hiring the best people in the best position for the job, no matter where in the world they exist. And that, for me, is a fundamental in terms of moving things forwards. And it always makes me laugh when even in the most recent regulations, they start to say, you must incorporate in this jurisdiction and you must employ XYZ person in this person that lives in that jurisdiction. It just doesn't make sense. You want the best brains at the table, and the way that you do that is going full virtual and full decentralized.
But it takes time as well, right, to move from one to another. We've had some very extreme moves in recent working practices and structures in the economy. And what we're getting now is the first iterations of those types of regulations moving forward step by step.
We are, and I think, you know, look, I love whenever I talk to Ben, like I get more excited about kind of what we're building, you know, and but it does take time, and you know, I think, you know, if you do step back for a moment, what happened with Terra, UST, or what is continuing to happen is those sort of early birth, you know, it's the early birth of this sort of new financial system. And, you know, I think Katie said in particular, you know, it's not all stable coins are created equal. And I think what we saw is not all projects are created equal in this new financial system that we're building. And I think we saw some of that play out. But you're absolutely right. The building takes time, like the good building takes time, but also the regulation takes time. And what regulators are still trying to do today is take what Ben just described and fit it into existing regulatory frameworks. But what's extraordinary is that when you are talking about open blockchains, and frankly, even, you know, even some not, regulators have more visibility on this new financial system potentially directly without intermediaries than they ever had before. And there are certainly new ways to think about regulation and the way we regulate. There are tools that can allow regulators, you know, to have real-time visibility on financial flows. That has never been true before. They always relied on siloed intermediaries. You know, you have Bank of America files a suspicious activity report with its regulator, Standard Chartered, right? They never see each other's, and the regulator never has a full picture of the entire ecosystem. That's different here. And I think what we're going to see over the next few years is this continued sort of push of this technology into the current regulatory regime. And I do believe that that will change over time with this kind of realization that, hey, look, this could be done differently and effectively. Because look, you know, like I'm all in on this new financial system, but at the same time, when something like Terra could happen, you know, when something like the Ronin blockchain attack by a nation state actor like North Korea can happen, we need regulation and we need sort of protections in place to sort of make this grow and work. But I do agree with that assessment, and that is like this is a work in progress. And last week is a pretty good, I think, indication of that as well.
Kitty, with all of these things in mind, there's a big debate going on about how much crypto can be retrofitted into current legal structures and regulatory structures, and how much of that needs to be brand new and to take a novel approach to actually regulating and legislating for these types of assets. Especially in the UK, do you think that the regulator is taking that approach of realizing that there needs to be something new, or is it more of a case of trying to fit it into those pre-existing structures?
So I think there's actually a mix of the two, and I think if I go back to my kind of my circles of regulatory concern or regulatory supervision, it's a case of, do you expand those circles to cover those gaps, or do you put something over the top which covers the whole thing and is a complete bespoke regulatory regime? And actually a combination of the two, I think, is where we're headed to. So we've already seen that certain stablecoins, as I said, are going to be brought into the existing payment services e-money regime, where it fits. It fits quite sensibly. Other areas, there will be something new. There will be something bespoke. Specifically looking later this year, we're expecting a consultation on the broader regulation of crypto assets. So this is kind of the your Bitcoin, your speculative investment type crypto assets. And I would expect that maybe there'll be something more bespoke for those assets, because otherwise it doesn't really work. But there's also, as Ari said, this is about how you supervise as well. So, you can put all the rules and regulations in place that you want to, but if you can't supervise properly, then it's completely useless. So I think this kind of idea of almost tech driving regulation is really interesting, because there are loads of great firms, blockchain companies, which are developing tools that can be used by regulators and that will really drive regulation. So instead of saying, these are the rules and regulations, how on earth do we supervise them? The regulators will be able to say, these are the tools that we have available to us in our toolkit. What can we do to reach our outcomes and our aims with these tools that are available to us? And I think that's quite I think that's maybe a shift in how regulators are looking at supervision, and it's quite exciting that that's in my view almost flipped from how it was before.
And that sort of leads me nicely onto my next question for you, Ari, which is that there's a lot of new approaches to regulation going on, and a question of how that will work. There's also quite a big question of who we doing that supervising, particularly in the US. One thing that really strikes me as a difference between the UK and US when it comes to crypto regulation is that in the UK, you've very much got a process led by the Treasury and the Financial Conduct Authority, where at least the person or the people that are making those rules are kind of consistent. In the US, we have new things coming out every week, it seems, from the SEC, from the CFTC, from the Treasury, from the Federal Reserve. Where is that ultimately going to land in the US, and who's going to be taking the lead on it? Or is it going to be a completely new hybrid approach for this new asset class?
Oh my goodness, I have no idea. It's absolutely true. We're seeing sort of, and I think that was what the executive order was about at the end of the day, was trying to sort of get these regulators to talk to each other to figure out sort of, potentially at least where the lanes would be in a regulatory framework. Eventually Congress is going to have to get involved here, but that obviously take some time. So I think the White House tried to sort of take things into their own hands. Look, I think that what we're going to see over the next even maybe few years, honestly, at least the next year or so, is you're going to see continued enforcement actions by the SEC. I think without sort of more framework or more clear sort of guidance, and that's going to determine sort of their view of the world. I think you're going to build out this sort of regulatory framework by enforcement action, for better or worse, when it comes to the SEC. I think there is a question. Is it the SEC? Is it the CFTC? Are these commodities? Are they securities? A lot of this comes down to definitions. I will say one thing, and I apologize if this doesn't answer the question entirely, but there is one place actually in the US, and I think it's true in the UK as well, and in Singapore and Hong Kong and other jurisdictions globally, and that is there are relatively clear regulatory frameworks for anti-money laundering in the cryptocurrency space. And I think there's this sort of sense that this is this Wild West, where money laundering is going on unaverted. And the reality is, in the US, if you are a cryptocurrency business, if you're an exchange, if you're a broker, if you're a custodian, you're required to have robust anti-money laundering and sanctions compliance controls in place, which means policies and procedures, trained compliance officers. You're required to use a transaction monitoring solution like TRM, where you ensure that you are not transacting with illicit actors or sanctioned individuals, right? And you're required to file reports with your regulator. And the FCA has been very, very clear that you are not going to get registered unless you have these types of controls in place in the UK. And even MICA, which is going to be this sort of large regulatory framework for the EU, has essentially said, we're not going to talk to this because we think FATF, which is the Financial Action Task Force, has gotten it right. And FATF essentially says just what I said, and that is you're going to be treated like a money service business. You're going to be required to have, or you are required to have, robust compliance controls in place. So it is interesting. It is this one area which obviously gets a lot of attention because, you know, when you're talking about hacks and Russia sanctions and, you know, terrorist financing and ransomware, you know, these are very, very top of mind issues. And they're not just fraud or financial crime issues. They're national security issues, you know, for the US and the UK. But those controls are already in place, and large exchanges, right? The FTXs and the Binances and the Coinbases, Geminis and Kraken, sort of the large exchanges of the world have, you know, large compliance teams that are using solutions like TRM that are trying to stop bad guys from transacting with their platforms. So I say all that to say, like, there is a lot of uncertainty, but it's also important, I think, to point to some of the places where there's some clarity here also. And I see Katie nodding, so that means I'm sort of half right, at least, with some of that.
No, I was just kind of agree with everything that you said, and you know, it always amazes me that people still describe this space, and I think even the FCA says, you know, the space is widely unregulated. I mean, it's not unregulated. You know, it's just a case of working out where it fits in at the moment. You know, so absolutely agree.
Thank goodness.
Ben, do you think there's, from all of this and from this uncertainty, is there an argument that it would be even in the industry's best interest to have a dedicated crypto regulator or a separate body that is solely in charge of the crypto industry, rather than this kind of, you know, fractured approach like we're seeing in the US, where it doesn't really fit anywhere?
Another brilliant comment, Ben, I'm sure.
So I don't think we're ever going to get to that position. I don't think we're ever going to get to a position where we have got one global overseeing regulatory body that kind of sets this kind of agenda. I actually think that, you know, the position that Ari mentioned in terms of the space being regulated, the space being transparent, you've got to be a pretty dumb criminal to use crypto to try and do any illicit activity. And, you know, there were a few comments back when the sanctions came in on Russian oligarchs as to, you know, would it be feasible for Russian oligarchs to launder their money and actually kind of conduct business in the crypto space as it currently stood. And whilst you've never got a full set of a suite of controls to be able to do that, the level of money that you're talking about when it comes to like the flows through this system as it currently stands, they just are dwarfed by the levels of money that is kind of existing in the oligarch sphere. It just doesn't compare. It's still such a nascent growing industry, and we've got so much transparency around this space already. I'm actually incredibly positive on the kind of the next evolution of sanctions controls. And I think that it's not just going to be obliged firms and entities that are engaged and aware in sanctioned kind of checks and sanctioned ability. It's not just going to be the bank's responsibilities to make sure that they're not dealing with the bad guys. It's going to be everybody's responsibility. And if I'm making a peer-to-peer payment or I'm engaging in a DeFi protocol, I want to know that that DeFi protocol hasn't got illicit actors behind it, and I'm not servicing various different other people. So, that obligation and that moral responsibility is going to flow down to all levels, which is going to be incredibly positive to society, because all the compliance positions that have come out, and especially with regards to AML and KYC and sanctions, they are a reflection of society's norms. And those society's norms are then incorporated and transposed into language that gets implemented by different government bodies. And those government bodies sometimes disagree, and you can definitely have variation and flex in that. But fundamentally, when you get down to it, most people know what is right and what is wrong. And if they are given the ability to make an informed decision based on the information put before them, then most people will make the right decision every single time. But the challenge with this kind of world is that it only takes one or two bad actors to make a really big impact in the world. And therefore, it's really important that we find a framework that lets everybody fight for what is right and the right thing to do. And that doesn't mean throwing away all regulation and not having any regulatory control and not having any kind of engagement with regulators or rules or different things. But it means giving everybody the ability to make an impact and a decision based on evidence that provided to them. I mean, the sanctions list, the OFAC lists, they are public lists. Right? Yeah, they are public lists. It's just we rely on the banks at the moment to implement those. And maybe in a peer-to-peer world, if we want this decentralized position, we shouldn't just rely on obliged centralized entities to implement them.
It's super interesting. I have two awesome examples of this, and I promise these are not shameless plugs. I think they're really good examples. And one was after sort of the invasion of Ukraine, we heard from so many small DeFi projects that they wanted to ensure that they were screening against sanctions, right? They did not believe that they had compliant obligations, and I was not going to advise them as to whether they did or did not, right? But they did want to ensure that they were a player in this space, that they were doing the right thing. So we actually literally over a weekend built a free screening tool, sanction screening tool that is open to anyone who wants to use it to screen against the OFAC list, just to solve that, right? To ensure that small businesses, and I imagine this is something that if individuals are doing large transactions, right, to your point, Ben, peer-to-peer, that this is something they can use as well. The use case was definitely small businesses, DeFi companies, DeFi, projects that didn't, that aren't FTX, right? That aren't going to buy, a bunch of licenses to a sophisticated tool. And then the other thing we recently did was we, with a bunch of different projects, Circle and a bunch of others, released this thing called Chain Abuse. And it's basically a site to crowdsource scams and frauds and all of that sort of thing, free, open to the public. So if something happens to you, you go on there, you explain what happened, you provide the information, the addresses, the information that folks would need to ensure that it doesn't happen to other people. And I think the unique thing about, and to investigate, and I think the really cool thing about crypto that is so extraordinary is that there is a self-policing element to this space. There is sort of this industry that is looking at this. I mean, if you're on Twitter and don't spend that much time there because it's like a dangerous place to be. But it's amazing the crowdsourcing that occurs just on that platform, right, in the crypto space. People sort of calling out scams and different frauds and different things that are happening in this sort of self-policing. So just kind of two cool examples that I think go right to the heart of kind of your point. And that is we can do things differently in this space, differently than what we've done before in terms of regulation.
Well, that's the hope, right, at the end of the day. And that's sort of the point of crypto, is that it's emerged from a context of things that people weren't happy with the current financial system or current regulatory and legal system to be able to address those types of issues. And now that it's here, we need to find some way of integrating it with that system because it still exists. But there is that chance to do something differently and have a slightly different take and perspective on how financial relationships and legal relationships work.
I mean, let's let's give the people that built the framework in the late 90s and after 9/11, let's give them their dues. They did an amazing job. They responded to the world in crisis after those planes flew into those buildings, and they put a framework in place that has saved the world on multiple occasions, right? It's a non-trivial thing to do that. But in putting that place in, they put a massively high barrier to entry to kind of engaging in the financial system. And I think what crypto enables and what DeFi enables and what Web3 will enable is a much more linear, progressive position. So you can go from, having 12 words and a decentralized wallet and storing your wealth on your mobile phone. If you're the poorest farmer in some kind of country that has no financial backing and infrastructure, and you can layer things through in a very linear and progressive way up until the point where you can say, okay, now I can enter a more sophisticated financial system. I can start taking loans and debt against my credit history and my different kind of assets. So, having that progressive position and that laddered journey, that on-ramp into society, is going to lift the entire world's ecosystem out, because you are not going to leave anybody behind. Everybody can go along that journey, no matter where they are, all kind of 8 billion people in the world. And when it gets to the top high-end position, the investment banks and the large institutional positions, then we end up with some really positive benefits, because we can go from T+2 settlement to T+0 settlement, which means that we don't have to have all of the Basel capital requirements in place for those 2 days of risk capital that were kind of in transit, whether they've settled or not. And that will free up a lot of money from institutional balance sheets. And then again, to kind of reiterate on Ari's point, that resolution position can be real time at a holistic level across the street. And it can be built in such a way that the regulators can see the resolution requirements of every single large scale institutional body on the street. So in the event of another systemic crisis, they can step in and have a much softer landing. So, as much as crypto is volatile and it's a volatile asset, it's going to lead to a much more measured and progressive society, I think.
Great. Well, I think that we're coming up on time, and I think that's a great and very positive note to end the discussion on. So lastly, just thank you to everybody for joining us today. We appreciate you taking the time, and we'll all be together again soon.
Hey, thank you so much. This was really terrific.
Thank you.
Thanks.
Cheers, guys. Bye-bye.
Thanks, man.